Hi guys, my name is Gerald from Trading Waves and welcome to today's short video. And in today's short video, we take a look at Australian dollar versus the Swiss franc. Before I go to the actual chart itself, I want us to take a look at the previous forecasts on this specific instrument on 1 hourly charts. This one being the first one here. And I'm just going to look at a very small section of it in trying to demonstrate how effective the wave theory in the way we apply it is very, very accurate. From this low here, one can see we have 1, 2, 3 waves, right? And after that, we had 1, 2, 3 waves lower, right? And then we have another 1, 2, 3 waves higher. Look at our forecast. After all these 3, 3, 3, right? One could actually say wave Y in white is there, is completed. Wave X in white is also completed there. And we should be seeing a downside down from this peak there. But we didn't say that. We said we are still looking for more upside. And we forecasted this structure to become a flat corrective structure and upside thereafter, right? As you can see, that's the forecast. And this was from, let's quickly look at the date there. This was from July the 26th. Then after that, from July the 30th rather, one can see that from the peak there, indeed, we had this move to the downside. At the time of printing this particular chart, we had only about 122 pips down from the peak where we had forecasted we should be seeing a move to the downside to come and complete a structure that is flat, a flat corrective structure, and then upside thereafter, right? So we had that. And then from a chart that was printed on the 3rd of August, which was yesterday, we can see that we have now completed the corrective structure as a flat corrective structure there. And we were beginning our move to the upside after the flat corrective structure was completed. Like that, right? And now we are anticipating that move to the upside. Now let's look at the real chart. This is the live chart. And we can see that indeed, flat corrective structure is completed. That move up from the X of the X itself, or the end of the corrective structure itself, the flat corrective structure itself, the lows of X in white, that move has since increased. We've had more movement to the upside, and we're expecting more movement to the upside. And we will be looking for wave Y soon before we can expect a move lower. And wave Y would be completing wave 2 in the purple degree, right? We expect that price should stay below the peak of wave 2 in green, which was the start of wave 1 in purple, right? Before we see more downside. But one can ask themselves questions. Why didn't we call WXY completed here? And we preferred a flat corrective structure before we could see a move to the upside. And we have specific reasons why we preferred a flat corrective structure and why we didn't call a WXY completed here. I mean, if you look at it, if one was to call this Y at this stage, they wouldn't be wrong, because Y would have went above W already, or the peak of W already. So it does qualify to become, or to be called a WXY. Right? But we did not call it a WXY, and we didn't think about calling it a WXY as yet, for the reasons which led us to forecasting a flat corrective structure and upside thereafter, right? And those reasons, if one is interested in knowing those reasons, I would invite you to join us and take advantage of this valuable information that which we have at our disposal, that which we can share with you, where we will be teaching you on how to make such forecasts as the one on AUDCHF and many more. or any instruments in the market for that matter. All right, so you can join us. We'll be looking forward to welcoming you on board. I hope you enjoy watching this video. Cheers.